Now, investors are expected to remain on the sidelines in anticipation of higher yields at the Treasury bills market today ahead of the T-bills primary market auction, where bills totaling 221 billion naira will mature and be rolled over. Dipo Ajayi, head of fixed income and FX at Chapel Hill Denham Securities, joins me to discuss what to expect this week. Dipo, thank you so much. Pleasure to have you. 221 billion auction today. The question is yields. Investors are expecting higher yields. How high can these yields go this time?
Well, I think the central bank has tried to actually show directions. If you check the last auction, 1 year paper actually cleared at around 20.69, and compared to the 20.7 that we saw 3 consecutive times. So, but post that auction, we've seen the central bank in the market about 3 times, where they offered the long-dated bill at 22.5. They've come again to do 22.34. But yesterday they did 22.33.
Okay.
To a great extent, that's close to about 29% when you look at the effective return. And but the DMO, as at the last offering in the market, they actually closed at 20.69. So today, I'm sure investors are looking to get a better yield, something reasonably higher than what we saw at the last auction. So, to my mind, I think I would likely see rates a bit above 21% at today's NTB auction.
Right. I mean, these yields keep rising and rising. But talk to us about, let's take a few steps back, liquidity levels at the market since Monday. I mean, what have been market highlights so far across the different segments? Yeah,
when you look at the money market side, the central bank has continued being in the market and mopping liquidity from the market. We'll see OP and overnight rate trading 29% at thereabouts. But yesterday we saw a bit of respite where it actually dropped to about 27 levels. But just about that was when CBN came back to the market to actually offer automobiles. They actually offer 250 billion, but they ended up selling about 513 billion. So it simply means that they've taken the market back to negative liquidity. And what that will mean is that we expect rates to actually go back in the money markets or back in the money market segment. On the treasury bill side, we've not been seeing much activity, and on the back of the fact that there's dearth of liquidity in the system. And also coupled with the fact that market perceptions that there's NTB auction today, and why do I need to buy in haste when I know very well that there's everything else that I can get a better deal at today's auction? So we aren't seeing so much activity in that side. But on the bond side, we'll be seeing a lot of interest, more like on the long-dated bonds, the 2053, 2050, 2049 maturity. And but what's amazing that the belly of the curve that actually puts in the best opportunity. A lot of people are not looking at that, and you will not blame, because a lot of people still feel that this month the DMO is still coming back with these instruments in the market. Why do I need to buy in the secondary market? So what we are doing, what market is just doing, a cherry picking instrument according to interest.
Now, with all that's going on, I mean, government is obviously raising all that it needs within the domestic market. As far as the deficit is concerned, 6 trillion, over close to 5 trillion has been raised already. Yeah. So that, to my mind, I'm asking, where does that leave the conversation for Eurobond? I mean, June was the month that was touted. I know nothing is permanent, but where are we?
The 6 trillion that the DMO mentioned, I think is for local borrowing. Because when you check the normal, the total deficit is north of about 8 trillion. So
for the 2024 budget this year? Okay.
So certain percentage of it is supposed to actually be borrowed maybe from international markets, and also from international financial institutions like IMF and World Bank. So what she's trying to say is that that's allocation for local market. They've done about 4.5 trillion. If you look at that, that's close to about 5 trillion that they've done around that. So it seems to leave the window for the international borrowing.
But I mean, hypothetically speaking, we have just 1 minute left. Is now a good time? Do we have a window if Nigeria were to go to the Eurobond market today?
Yeah, about 4 African countries have done that already. We see Cote d'Ivoire, we see Kenya, we see Benin Republic,
double digits.
We saw Kenya just yesterday did 7.5 for a 7-year bond. And I don't think there's a better time to us to. Of course, what we are looking at is that to go in at the best time when Fed starts reducing rate. But it doesn't look at we'll see that anytime soon. Right. So I think we need to just go in so as to ensure that we're able to stabilize that.
Okay, we'll leave it there. Thank you, Dipo, for talking to us today. Dipo Ajayi, head of fixed income and FX at Chapel Hill Denham Securities.